Hello traders, you're welcome to this video and I welcome you back to the Forex Geek channel. If you are looking to level up your technical analysis game, then this video is for you. Okay, in this video we are going to be diving into the power combo of the RSI or relative strength index and the moving average indicator. So this dynamic duo can help you make smarter trading decisions by identifying trends, spotting reversals, and filtering out false signals. So you might want to grab your notepad and hit that like button as we jump right in. So I'm just going to start by adding the RSI to the chart. Let us talk about the RSI. The relative strength index is a momentum oscillator that moves between 0 and 100. Now, this indicator is used to identify overbought and oversold conditions in the market. For example, when the RSI is above 70, when you have the RSI value above 70, the market may be overbought. And when it is below 30, the market may be oversold. But as powerful as the RSI is, it sometimes generates false signals. Okay, that's where the moving average indicator comes into play. Now, a moving average smooths out price data. All right, I'm just going to be adding the moving average to the chart right away. We are going to use the 50 EMA. All right, so a moving average smooths out price data over a specific period. In this case, the 50 period. Okay, you can be able to modify the settings. All right, so the moving average makes it easier to identify the direction of the trend. It works as a filter, helping you confirm whether the RSI signals align with the overall market direction. For example, if the RSI indicates an overbought condition, all right, but the price is still trending strongly upward according to the moving average, it may not be the best time to sell. Instead, the moving average can help you stay on the right side of the trend. For example, now, in this situation, as the moving average was still beneath the candlesticks, it was not yet the best time to sell, in as much as the RSI had already entered overbought territory. Okay, remember that we are using the moving average to confirm our signals. So in as much as you might say, yes, price did sell for a while, right? Price did sell for a while after the RSI gave us the entry signal for a sell, but the moving average at that time did not confirm the sell. It only confirmed the sell around here when the RSI was already closely oversold, and that makes this strategy better fit for a trending market, because we can see that this was a ranging market. Can you see how price was moving sideways? So this strategy is not good for a ranging market, because before the moving average confirms the signal given to you by the RSI, it will already be too late to enter. So if you want to use this combination of the RSI and the moving average, it's better to use it in a trending market. All right, so you can either decide to use the SMA or the EMA actually. All right, the 50 period moving average is a common choice for trend identification, but again, this depends on your preference. Okay, so like I said, this strategy is better suited for a trending market. So let us look for an example in this trending market. So we can see that we had the RSI sell signal around here, and then the moving average confirmed the signal somewhere around here, right? So we would have considered entering a sell right about here and then setting our stop loss. At this point, the RSI was still trending downwards. It was not yet in oversold territory, because this is a trending market, so we are good to go, right? So after entering a sell, we can set stop loss above here And then for your take profit, you can just wait for when price gets to the nearest support zone. Right now, because this is a trending market, we can also look for another sell opportunity around here. So we can see that here the RSI, although it did not enter the overbought territory per se, but it got to a point and then started reversing back down. The moving average also confirmed that sell because the price got up a little above the moving average and then crossed back down, confirming the sell. Okay, confirming that this is a sell trend. So we could have considered entering the sell around here, and for a tight stop loss, you can just hit above the newly formed high, and then you can still take your profit at the nearest support zone. Okay, so the opposite is just going to be the case for a buy trend. So if we have a buy trend and we have price forming higher highs and higher lows, you just have to look out for the RSI coming from the oversold territory. It may not necessarily be inside the oversold territory, but at least it should be pointing upwards and not far away from the oversold territory. Okay, and then you have to wait for price to cut above the moving average. That's going to be a confirmation for a buy. So after entering a buy, you can set your stop loss just below the swing low, and then for a take profit, you can target the nearest resistance zone. All right, or you can just wait for price to cut back down below the moving average and you exit your buy trade with that signal. Okay, now it is important to remember that no strategy is foolproof. Okay, always combine these indicators with proper risk management and other forms of analysis like support and resistance or candlestick patterns. The goal is not to predict the market, but to improve the odds in your favor. So, in terms of risk management, it is not advisable to use a large percent of your capital in one trade. All right, so you might want to focus on maximum of 2% of your capital in one trade. Okay, and then for your risk to reward ratio, it's ideal that you use a risk to reward ratio of 1 to 2. So if you are risking $1 rather, if you're risking $1, you should be targeting at least $2 profit. Okay, and then in terms of leverage, all right, do not over leverage. Well, so long as you are able to use an ideal size of your capital per trade, then there will be no need to worry about leverage anymore because you have already put the risk management in check. Okay, and then manage your emotions properly because sometimes emotions get in the way of traders. You might know how to do analysis properly, technical analysis. You might identify good opportunities using this strategy, but if you are not able to control your greed or your impatience or your fear, you might end up losing unnecessarily. Okay, so try as much as possible to put your emotions in check. So that is it for this video. I hope you found it insightful. If you did, kindly smash that like button, and if you're new here, don't forget to subscribe and join our growing community of traders. We post actionable strategies and indicator breakdowns every day, so hit the notification bell to stay ahead in the market. Drop a comment below if you have any questions or want me to cover another strategy. Thanks for watching, and I'll see you in the next video.